In this video, we will talk about the transfer for insufficient consideration. A consideration is insufficient when the consideration received is lesser than the fair market value of the property transferred at the time of sale. The difference between the consideration received and the fair market value shall be deemed as gift or donation. Hence, it will be subject to donor's tax. In 2018, Pedro sold his car for $2,300,000 to his friend Juan. The fair market value of the car at the time of sale was $3 million. How much is the amount subject to donor's tax? Let us check first if the consideration is insufficient. Now let's compare the consideration and the fair market value. Fair market value at the time of sale, $3 million. Consideration received, $2,300,000. Apparently, our consideration received is lesser than the fair market value. Thus, the difference between the two is our donation or gift, which is the amount subject to donor's tax. But not all transfers for insufficient consideration are subject to donor's tax. Here are the exceptions. First, bona fide sales. This happens when the property transferred is an inventory or the transfer is made in the ordinary course of business. So, even if the consideration is insufficient, it is still not subject to donor's tax. The reason is that the insufficiency was due to bad bargaining. A company engaged in the manufacture and sale of machineries introduced a new product in the market at a cash price of $2,500,000. A client negotiated with the sales manager to reduce the price to $2 million. The latter thought that the price asked was reasonable, considering that the product is still in its introductory phase. As a result, the sales manager acceded to the client's request. Should the difference between the original cash price and the amount paid by the client subject to donor's tax? As you can see, the consideration of $2 million is lower than the cash price of $2,500,000. Therefore, there is an insufficiency of consideration. Now the question is, should the difference between the cash price and the amount paid be subject to donor's tax? The answer is no, because the property transferred is an inventory since the company is engaged in the manufacture and sale of machineries. Therefore, it is classified as a bona fide sale. The second exception is the transfer of real properties classified as capital assets. Capital assets are assets that are not used in the business. Example would be an idle land. This is in contrast to ordinary assets. Real properties classified as capital assets are exempted from donor's tax because they are subject to capital gains tax, which is a final tax. Capital gains tax is based on the higher amount between the consideration received and the fair market value of the property transferred at the time of sale. Therefore, the government is not put in a disadvantaged position. That is why real properties classified as capital assets are not subject to donor's tax. Again, only real properties classified as capital assets are not subject to donor's tax. Therefore, personal properties classified as capital assets plus ordinary assets, both personal and real, are subject to donor's tax. In 2018, Pedro sold his car for $2,300,000 to his friend Juan. The fair market value of the car at the time of sale was $3 million. Assume that the car is classified as an ordinary asset. How much is the amount subject to donor's tax? What you will do, identify first the type of asset being transferred. In this case, it's an ordinary asset. And ordinary assets can be subject to donor's tax if the consideration is insufficient. Now, let's check if the consideration is insufficient. Compare the fair market value of the property and the consideration received. Fair market value of the property at the time of sale 3 million, consideration received 2,300,000. So the difference of 700,000 will be the amount subject to Donner's tax. Same scenario with the previous one, but in this case, we will assume that the car is classified as a capital asset. So how much is the amount subject to Donner's tax? Again, the first thing that we need to do is to identify the type of asset being transferred. In this example, it is a capital asset, but is it real or personal property? So the car falls under the personal property category, and personal properties classified as capital assets are subject to Donner's tax. Now let's compute the amount of donation. Fair market value at the time of sale, 3 million. Consideration received, 2,300,000. So the difference of 700,000 is our donation, which is subject to Donner's tax. Third case. In 2018, Pedro donated a land classified as capital asset to his friend Juan. The fair market value of the land at the time of sale was 3 million. How much is the amount subject to Donner's tax? Now identify the type of asset. It is a capital asset, and the land falls under the real property category. And as discussed earlier, real properties classified as capital assets are not subject to Donner's tax. So the question is, how much is the amount subject to Donner's tax? And the answer is 3 million pesos. Now, why 3 million? If you read again the problem, it was clearly stated that the land was donated by Pedro to Juan. So the second exception applies only when there is a sale involved. Now let's proceed to the third exception, where the transfer involves fictitious consideration. Where the consideration is fictitious, the entire value of the property transferred shall be subject to Donner's tax. We don't have to compare anymore the consideration received and the fair market value of the property. Mr. and Mrs. Mapanlinglang sold a parcel of land to their daughter. They immediately executed a deed of sale with the following details. Location, Cebu City. Fair market value, 25 million. Selling price, fictitious, 250,000. How much should be reported as gross gift, if any? Our answer would be 25 million, so the entire value of the property. And that ends our discussion for today's video. If you have any questions, feel free to comment down below.